Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is April the 1st, Thursday, 2010. Today is also our Friday because the markets are closed tomorrow. Before we go any further, I didn't know this till today, so let me ask you guys. Typically, on a 3-day weekend, the government releases the news that, like in this case, we're supposed to get the news on Friday on the unemployment data for the month. The government already knows that number, and typically, when you have a 3-day weekend like that, they release it early on Thursday, or they release it on Monday. Why did they not do that this time? I can only think of one reason to not do that. I mean, if that's something you have done in the past, something you're known to have done, is to release it early to aid investors, then why would you not do it this time? I think the only real reason is that it's not as good as people had hoped it was going to be. That's my personal opinion. Maybe it's too conspiracy theorist for you, but that's something to think about. We've seen a trend over the past couple of weeks where analysts are basically becoming overly optimistic, and it's kind of burning. You'll notice RIM came out with their earning data last night after the close, and though it was positive, it was below expectations, and they were down substantially today. Yeah, Research in Motion lost about 7.5% for the day. Um, it's important that we don't get too optimistic or overly optimistic, I should say. And I think we're seeing that happen. I noticed on Wednesday that what we have it was they expected an jobs increase of 40,000 from the private sector, and we ended up with a loss of 23,000. That again, they were overly optimistic, and they got burned by it. Uh, Basically, I'm considering my stance for the numbers we're going to get on Friday are that they may be improved slightly due to the census workers, but I think I wouldn't look for what there's some people out there looking for as much as 400,000 jobs created. That's insane. Uh, there's others looking for 300,000. I think the consensus is 200,000 jobs. Yeah, that's what they're looking for tomorrow, and I would be surprised if they got it. If they do get it, let's look at the chart here. If they do get it, yes, we could see some upside on that news come Monday if it was substantial. That would give them some upside here, but again, you're overbought. All your conditions are overbought. I won't go through them again right here. You've got major overbought, sell signals. This is your major support. You've rallied substantially from that point. You haven't had a pullback yet. So yes, there's they could get some upside from that news, but again, it's not uh, sustainable. Yeah, sustainable from this level higher. I don't see it as sustainable. On another front, as I've talked to you guys before, kind of throughout the past couple of weeks, we've discussed how this collapse and this credit problem resembles the 1930 or 1929 crash. Um, After that first year, like I said before, 1929, the market fell substantially, then bounced in early the next year and rallied all the way into April, where they peaked again 30% from the previous high, which oddly enough is the same thing the Dow Jones Industrial Average has done this time around. We fell off substantially. We bounced in March of this year, and we're coming around to April now, and we're now 30% from the previous peak. That's kind of right there is a good point that, like I've already said on my March 22nd analysis. If you've watched that video, you know where I stand on that. But at 30% on the upside, to be back where you were, which we can't sustain, we already know that based on real estate and credit and taxes and all this other stuff. So, I mean, you have 30% to the upside here and much more to the downside. So, like I said before, I don't think a move from here higher is sustainable, and I wouldn't be looking for that. Now, back to my point of 1929. After that first year, they believed it was over. Okay, they had contained it in America. They saw their way out. The end of the story, as we all know, didn't actually stop there. It was much longer, and the reason was compounded by other countries that had problems. Now, today I heard an analyst talking about Greece. And they said that sovereign debt restructuring, like Greece, hasn't been seen since the 1930s. This is, again, another strong correlation that we have to look at and say, wait a minute, if all of our facts resemble the 1930s, our result would resemble the 1930s. Okay? So I have a lot of caution in this market right now. One analyst I was watching said, he's a foreign analyst, but he said there's just too much uncertainty in the market to be overly bullish, you know. So he's cautioned against that, and as would I. The main thing to draw from all this stuff that we can look at, we know the fundamentals. We've got news coming up, makes it really difficult to trade when there's news like this out there that we don't know. Um, we have starting April the 12th earnings coming out. That's a lot of stuff we don't know. So what we do in situations like that, when we're trying to trade through the unknown, wait for the smoke to clear or focus on the technicals. And the technicals are telling us overbought, overbought, extremely overbought from the or extended from the support line. Let's see, moving on down. No volume behind the buy here. Bearish crossover forming here, coming off the extreme overbought of the RSI condition. Move down, take a look at the NASDAQ. Basic same conditions. Major sell signal here, coming down off the overbought slow stotch. You can see a little pop to the upside, but again, to be short-lived, and they had a little glass ceiling right there as you've got this overbought condition, which kind of keep a, like I said, glass ceiling on it. And you are again extended severely from the major support. You've got increased sell volume here, crossover, bearish crossover of the MACD, and coming off the extremely overbought RSI condition. Lots of signals there, including these great number of gaps here that need to be filled. So again, I'm going to stick with my bearish stance, even though I don't exactly know what the news is going to be on Friday, or I don't really know what the earnings data is going to be starting in April 12th. But all in all, I'm going to always revert back to the technicals. Technicals tell me what to look for, and this tells me to look for a sell-off in the market. So that's what I'm doing, okay? You got a long weekend coming up for you. One bit of news I'd like to bring to your attention. I told you about a week ago, my brother and his wife had their baby, Claire Olivia. She has what's called RSV, I think is what they call it. I don't really sure what that is. She's been in the hospital for a couple of days. They're now taking her to Little Rock Children's Hospital. It's not great, so if you wouldn't mind keeping her in your prayers. If you're not a full access member and you want to be one, go to our website, sign up, pay the $145 for the whole year, and boom, you're in. You want to be on the right side of the trade. To make sure you're on the right side of the trade, become a full access member because you don't want to bet against us. Why? Because then we're taking your money. Okay? That's not good. Take care. Enjoy your weekend. God bless and refer a friend.